Hello, everyone. My name is Mo Zulfiqar, and welcome to Income Investors. With me today is John Whitefoot with another income. If you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. President Biden's energy policy and those of other governments around the world are expected to put a big dent in demand for oil and gas. But the glacial pace of development of clean energy investments and even delays or cancellation means oil and gas is going to be with us for a very, very long time. That's why income investors should keep oil and gas stocks like Petrobras, ADR, traded on New York Stock Exchange under symbol PBR on their radar. Global oil prices are expected to stay near $80 per barrel in 2024 and slip to $74.35 per barrel in 2025. Over the next 5 years, though, West Texas Intermediate is forecast to average $136 per barrel and $146 per barrel for Brent. John?
Thanks, Mo. Petrobras. It's a big state-run multinational company that specializes in the oil, natural gas, and energy industry. The Rio de Janeiro-based company is engaged in everything from prospecting to drilling, refining, processing, trading and transporting crude from producing onshore and offshore oil fields and from shale or other rocks. It has proved reserves of a pretty big 9.8 billion barrels of oil equivalent. And every day it churns out something like 2.7 million barrels of oil equivalent. Of that, 1.8 million barrels is crude oil. Now, with the decline of the internal combustion engine and expected pullback in oil demand, Petrobras is also taking steps to decarbonize its operations, owning 3 biodiesel plants, 15 thermoelectric plants, and 1 photovoltaic solar plant. It also has to do this because of a growing number of countries, 151 of 198 countries at last count, that have made net zero commitments by 2050. These countries are responsible for 88% of global emissions and 92% of the world's GDP. On top of that, 43% of the world's leading institutional banks may actually limit capital available for oil and gas industries due to stricter goals.
I was reading that investors have turned more bullish on Petrobras since it increased its 2023 oil and gas production guidance.
Yeah, and that's helped its share price despite a third quarter earnings miss. For the third quarter ended September 30th, Petrobras reported revenue of $25.55 billion, which was down from $32.4 billion in the third quarter of 2022, and well below Wall Street projections of $27.4 billion. Net income was $5.46 billion, or 84 cents per share, or 86% per share on an adjusted basis. And this too was well below Wall Street calls for adjusted earnings of 90 cents per share, and third quarter 2022 earnings of $1.35 per share. Now, management blames some of the lower earnings on lower Brent prices, rising costs, and an unfavorable exchange rate. It's not all bad news, though. Management raises 2023 oil and gas production guidance to 2.8 million barrels of oil equivalent per day, and that's actually up from 2.6 million barrels of oil equivalent per day before that.
And how about its dividends?
Well, Petrobras recently announced a new cash dividend policy, one that cuts its payments to 45% of free cash flow, but allows for share buybacks. Before the reduction, it's distributed as much as 60% of its operational cash flow. The company will continue to pay a minimum dividend payment of $4 billion a year, and that's as long as Brent oil prices are above 40 per barrel. And right now, Brent crude is trading at, I think, around 77 per barrel. Now, the new dividend policy will see the company pay dividends in line with those of its peers. It also means investors will be able to rely on a more predictable payout, as opposed to payouts that fluctuated drastically from quarter to quarter. Now, to that end, Petrobras announced a November dividend of 0.548 per share, or $2.89 per share on an annual basis, for a pretty frothy current yield of 18.03%.
PBR stock is up despite a third quarter earnings miss.
Petrobras stock has gained roughly 7% since its third quarter results were announced on November 9. The strong gains are a result of increased full-year production guidance. Petrobras also reported positive free cash flow for the 34th consecutive quarter of $8.3 billion. And more broadly, Petrobras stock is up more than 20% over the last 6 months, and I think more than 70% year over year. Now, those are big market-crushing gains, but PBR stock has more room to run, with Wall Street analysts providing a 12-month share price forecast of $16.10 and a high estimate of $21.20.
John, thank you so much for your insights. Just to recap, Petrobras is the largest oil producer in Latin America. It has a strong balance sheet, reliable cash flow, and improved dividend policy. Despite an underwhelming third quarter, shareholders remain upbeat with the company looking to increase its 2023 production. The upward revisions come from new wells coming online in the fourth quarter and less maintenance and related downtime. The company also slashed its 2023 capital spending projection 18.75% to $13 billion. These tailwinds should help further energize Petrobras stock and its variable dividend in 2024. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.